Hello, I'm Chris Kapches, President of Chestnut Park Real Estate, and today I'm going to provide you with the February market report. I have to begin by telling you I'm a little disappointed with February's results. After January's very positive results, I was expecting that we would build on those results and have a very strong February. That didn't materialize. And generally, even though I'm not a believer that weather impacts the sale of real estate, I do believe that this February, the weather conditions did have an impact on the market. We had a number of snowstorms. Those snowstorms caused havoc in the streets and very difficult to show properties. And I think as a result of that, a lot of potential sellers didn't bring their properties to market. So we anticipate that we'll see more properties coming to market in March. But as a result of that, we saw sales sort of flat compared to February of last year, about 2% difference. But what was really disappointing was the number of properties that came to market, substantially less than we had last year. And as a result, by the time we got into March, the number of properties available for buyers is actually quite limited. Of course, the immediate impact of not having enough inventory is we saw prices starting to rise. And overall, the average sale price for the entire GTA came in at $780,000. That's starting to push the affordability envelope, but it's much more dramatic if we look at what happened in Toronto, the city of Toronto, the 416 area. Average sale price in the case of the 416 came in at $850,000, and that is getting dangerously close to that frenetic price increase that we saw back at the tail end of 2016 and the early part of 2017. So affordability is going to continue to be a problem if, in fact, we don't get more inventory coming to market. Yes, we've had mortgage interest rates that have increased, and yes, we have the stress testing, but that seems to have worked its way through the marketplace, and buyers seem to be coping with that in a way that isn't preventing them from getting engaged in the marketplace. The most sort of egregious situation was with semi-detached properties. They were literally flying off the shelf, particularly in the 416 area. The average sale price came in at over $1 million, and the last time we saw that for semi-detached properties was back during that period that I just mentioned, late 2016 into 2017. In fact, there were some areas where there were just simply no semi-detached properties available to buy. And again, that of course had a tremendous impact on forcing average sale prices up. The other area that I think is worth mentioning is condominium apartments. That's sort of the last bastion of affordability. And even there, we're becoming dangerously close to unaffordability. In the 416 area, what we saw in February is average sale prices for condominium apartments very dangerously approaching $700,000. That's really pushing the envelope, because for $700,000, you're likely to get a relatively small condominium apartment, but it's the only affordable housing source that we have left, and hopefully it'll stay that way if we can get more product on the market. I do also like to comment on the higher end. We, I think, are starting to see some minor recovery at the high end of the market. And by that I mean properties that have a value of $2 million or more. What we saw in February was that properties that are in that price category, almost the same number of sales as we saw last year in February, which is encouraging, because we saw that market really take a hit, particularly after the provincial government passed a number of measures to try and cool the market, especially the foreign buyers tax. Seems to be recovering, which is wonderful to see. And when I say that, I'm referring to the 416 area primarily. There's still some suppression of prices in the 905, and I was actually hoping that the 905 would respond as positively in February as it did in January. We didn't see that happen. But on the whole, I still think it's all to do with inventory. So hopefully as we get into March, we'll see more inventory, and some of these issues that I've described in the February report will kind of dissipate, and we'll see much more activity. Of course, we anticipate better weather, which might drive more listings to the market. So that's what we're hoping for. All the details of the February market report you can find on Chestnut Park's blog, where I outline with some data all the information that I've provided you today. So we'll have to keep tuned to see what happens in March, and keep our fingers crossed that we see more properties coming to market, and then that sort of roadblock that the lack of inventory has created will pass. Thank you.